Welcome to Cliff Notes, the podcast where business meets inspiration and strategy meets balance. I'm Brandon Clifford, CEO of Business Alliance Inc., entrepreneur, investor, and your guide through the world of business, franchising, and leadership. Whether you're a seasoned entrepreneur, an inspiring franchisee, or just someone looking for actionable advice to take your career to the next level, Cliff Notes is here for you. Join me as we break down the complexities of business and life into bite-sized, actionable insights. This is Cliff Notes, your shortcut to success. Hello and welcome again to another episode of Cliff Notes Podcast. I'm your host, Brandon Clifford. Excited to be here today. So typically I bring you kind of short, impactful notes on how to improve yourself in life and business. And every once in a while I like to take a little bit of a step back and have more of a conversation and bring in a guest. So today, a special guest joining me, a good friend, Sebastian. We go back 10, 15 years. I don't know, like someone who've just got to know through the business world, networking and whatnot, and have kept in touch and done some business together, even just become friends over the years. So excited to have with me today, the approved guy, Sebastian Boyer. Sebastian, thank you so much for joining me.
Thank you, Brandon,
How
for
are
having
things
me.
with you today?
Excellent. Feeling great. Just started a new workout routine. I'm on day 3. Super sore, but my energy's great. I'm excited.
That's good. That's good. Get past those first 7 days, right? Don't worry about 3 months from now. Day 3, that's good. So you're actually
Yeah.
tomorrow's day 4. Just one day at a time, right?
Exactly. One day at a time.
Well, so, I don't know if you probably heard it. Like, it's a cool little like thing about working out. You don't have to like necessarily have a goal for months or days or whatever. It's just put on your workout shoes.
Just
Put on
do
your
it.
workout shoes. Anybody
Yeah.
can do that. If you want to start
Yeah.
exercising, just put on your workout shoes.
Yeah. Get
Or
up.
change
Number
into your gym
one,
clothes, right? Something like
go. That's it. So what I do is I just set it all out there the night before. So as soon as I open my eyes, I see it. It's there. You got this. It's waiting for you,
that,
and I have
right?
no excuse. You got to get up and go.
Yes, no, I tell my kids that too, like when it comes to like instruments, because they like my daughter is learning the guitar, I got another one who plays violin. Like you can't have it in a case. You got to put it out in front of
Yeah.
you, like by your bed, so that you see it. And if you don't play that guitar, you're gonna feel guilty. It's gonna make you feel bad. You got to do it.
Yeah.
You
No excuses. Yep.
Cool. Awesome. Thank you so much for joining me here, Sebastian. For those who maybe don't know you and haven't checked out the Approved Guy YouTube channel, which I don't know why they wouldn't, but just share a little bit about yourself, who you are, where you come
Yeah, just my current status and where I'm at. I have a YouTube channel, The Approved Guy, at The Approved Guy. You can find me on social media. I teach personal credit, business financing. I also teach debt elimination strategies and cash flow efficiency, and also how to protect your money in your own business banking system, which ultimately leads to your estate planning and asset protection and your legacy, which is what I believe is what we're on earth to do,
from.
is to create a legacy for our children and for our children's children, for our communities and the people that we have influence over that God has put in under our authority or in our network. That's what I believe we're all here to do, not just to gather wealth for our own personal gain because we can't take it with us. So
Yes.
what's the point?
Build up treasures in heaven doesn't
That's
rust,
right.
or and pirates can't steal, something along those lines. But yeah, no, so has that always been, I guess, kind of before we get into the nitty-gritty of what you do and what that means, tell us a little bit about like your journey. Have you always been interested in finance, number? Like, how'd you get into the finance space?
No, so what's interesting, I have a very mixed cultural background. On my mom's side, she's of Jamaican heritage, and then that's a mixture of Irish and India in Jamaica that came to America. And then on my father's side, it's a mixture of French and then Egyptian that landed in Haiti, in the
Mm.
island of Haiti. They met in high school here in the United States in Miami. And anyways, my grandfather on the Haitian side, he was actually a prime minister of finance in Haiti
Oh,
for a very
wow.
short time. I never thought about getting into financing. I went to school, studied marketing and communications, basically. My first 10 years out of college, it was sales, really, just random different sales jobs and just selling cruises and then this and that. And then eventually I ended up in a business software and like marketing company, which I ended up becoming the head of the company in terms of sales and development. So I wore a lot of hats there. I got to learn about software development, about CRM and marketing and designing and developing websites. So I learned a lot, and it was something where I was really flourishing, doing really well. But I had gotten to a point where it was a job and I wasn't really excited to go to work. It was just I was doing it because I had to type of thing. And then my younger brother started Orange Fi, which is a business finance consulting, coaching, and brokering service company. And I actually had a client who needed a loan to fund their marketing, needed about 35,000. I referred him to my brother. My brother said, took care of him. Guy came back, he paid for his marketing, and then my brother sent me a commission check. So he was being really sneaky. So I was like,
So
what's
you
this for?
didn't know you were getting a commission. You were
No,
just
I didn't
trying
know
to
I
help
did. Yeah.
this contact out and help your brother out. That's all.
Yeah. Yeah.
Yeah. Uh-huh.
Yeah, but he knew what he was doing. He was planting a seed. So I'm like, what's this for? He's, oh, it's for your client. And I'm like, okay, what do I need to do now? And in the marketing and software business, once you collect the payment, that's the beginning of servicing the client. In
Hmm.
the business finance space, that's actually where it stops because at
Hmm.
that point, the client gets the funding. And so I said, what do I do now? Do I need to, how do I service the client? Oh, no, that's it. You're done. Just
Hmm.
send some more. And
Hmm.
I'm like, okay. So this is crazy, Brandon. My wife was 2 months pregnant. Okay. I had a job that had a very strong bonus that I was getting every year. All health insurance was covered. I had a very good salary, and I could very well just stay there in that position very comfortably, and I'd still be there today. That was like 2012. Yeah. 2 months pregnant, our first baby. And I'm looking at my life and I'm thinking, do I want to continue to do this or am I going to take a risk and do something different? And I decided, okay, I'm going to trust God. And I just took a leap of faith. Now, at that time, if you look at my face, I didn't
Yeah.
have any of this hair, white hair. And I think that being an entrepreneur, jumping into a commission environment, right?
Hmm.
It puts age on you. There's definitely a lot of challenges and a lot of obstacles and a lot of time where you're questioning your decision. But on the other side, the reward is so great. The freedom and flexibility of being able to spend time with my family if and when I want to or choose to, and just the upside potential of growth is unlimited,
Yeah,
right?
and here we are 13 years later. You still, ever since you went, before we get, I know you've had some time to probably reflect and you think about, what, whether you should have, shouldn't have. And like you said, sometimes you probably were like, oh, I should have kept that job. And other times you're like, this is the best thing ever. But before we get into that, I want to talk a little bit about the decision-making process that you went through. Like you said, your wife's 2 months pregnant. You had a good gig. What was there something pivotal? Was it a message from God, or what was it
Yeah,
that actually
it's just
pushed you over the edge
I
to
felt
take
like
that leap?
I felt like I was living in
Hmm.
a constant state of anxiety. I just wasn't happy. I really
Hmm.
had no, in terms of my work. And I knew that there was something was off in terms of, I loved the owner of the company. We had a great relationship. We're still friends. It just wasn't my purpose. I really wasn't living in my purpose. I knew there was just something more, and I just felt it was now or never. Either I make the decision to go out on faith and do this now, or I'm just going to end up here, and that scared me. It scared me to think that I'm going to live the rest of my life with this feeling of anxiety of I'm not where I'm supposed to be. And so I had to go figure that out. And yeah, and I took that leap of faith,
Yeah.
and
And so
since
you
then,
partnered up with your brother. You guys were working Orange Fi. I guess I know what Orange Fi is, but I guess explain for our listeners what is Orange Fi. I know you mentioned a financial company, but
yeah,
what
yeah.
exactly does Orange Fi do?
Yeah, Orange Fi is short for Orange Financial, and Orange Fi is basically a business finance consulting, coaching, and brokering firm.
Hmm.
So we start with consulting, where we look and review our clients' case and circumstances, and we do that for free as a consultant. And if they need assistance to improve their financial picture, right, whether it be their credit or the way they're structured their business and how they're
Hmm.
managing their money, then there's coaching that might help them to improve or qualify. And then ultimately, if they are ready to qualify or once they're ready, then that's where the brokering
Yeah, because
is.
everyone thinks, oh, I want to own a business. I'll just get a loan. I'm just gonna. It's like coming from the franchise space. I've done franchise consulting, been a franchisor, all that kind of, and talk to potential
Yeah.
owners, and you ask them the question, how are you going to fund this startup? Oh, I'll get a loan. And so a lot of people, though, they don't understand what are some of the biggest misconceptions when it comes to getting funding a business, especially a business startup, and maybe even if there is any nuances to franchising, but just
Yeah. Oh, yeah. There's so much. Biggest misconception I would say is really that you just have to have one. It's one dimensional. Oh, I have great credit, so I can get what I
Mhm.
want. No, not necessarily. Or my revenue is really strong. So as long, I'm going to be able to get funding because when you look at my income, I'm really strong. So the thing is, both of those things have to work together. It's better to have good credit and good income versus no credit and great income, or no income and great credit, because they need to work together. And then it's not just income and credit. And it's also, what are we looking at funding? So there's several options available. There are a few different ways to secure financing for a franchise. And I think the biggest misconception is just that there's only one way, and most of the time folks are looking at whatever their only strength is as the way, or the that they think is going to work. And that's where you end up in trouble, because again, unfortunately, when you go to a bank directly, that bank has its limited product inventory, whatever it's offering. And
Hmm.
you may get lucky and get approved with that bank. But if that bank doesn't qualify you for whatever reason, now you might feel like, oh, I'm not qualified, I can't get approved. And that
Hmm.
bank's not going to tell you, oh, you know what, here's another bank you should go talk to, because that's just not how they operate. They're literally at that point trying to get you out the door. They're usually not even going to tell you why. They're just
Hmm.
going to say you're going to get a letter in the mail in 30 days. So now here you are, frustrated with an inquiry on your credit. You got declined
Hmm.
and don't know what to do next. And so a lot of people just stop right there. They give up.
Yeah, they're defeated, right?
They're
And
defeated.
then all of
Yeah.
a sudden, like you're like, oh, it's not meant to be.
Yeah.
I'm not
They
going to own a
start.
business, and you go
Correct.
back to the job, and then you have, and so I'm not projecting, but I'm guessing that might be,
Mhm.
I guess that's part of your why behind now finding that sense of fulfillment is to help other people get out of that place you were. And
Yeah.
is that accurate assessment of what I'm hearing?
Yeah, definitely. Because I think one of my passions is to help people realize their entrepreneurial dreams, and
Mm-hmm.
to step out of
Mm-hmm.
whatever rat race they're in
Mm-hmm.
into their purpose. That's one of the services on my list of services on the Approved Guy website,
Yeah.
which is helping you living on purpose. So I've had conversations and consultations with people where we're not even talking about a particular business or
Yeah, so
money
people don't need
even.
to, no one needs to come to you with an idea even per se. It's more just I want to understand what my options are. And so then you take kind of
Yeah,
like a holistic approach to who they are and make some
correct.
recommendations. Yeah. And you
Yeah,
touched upon a couple, you said there's lots of different options. And I want to get back to your personal story here in a
sure.
minute, but just again, to kind of level set, what are kind of like the main financing options? Everyone's heard of SBA, Robs,
Sure.
what are kind of like the main.
Sure, yeah. So that you said it, I would
Mhm.
start off with SBA 7A. That's gonna fund for a franchise anywhere between 150,000 up to
Mhm.
5 million. And then there's going to be the ROBS program, which is rollover business startup, which is a self-directed 401k rollover. And that's really just based on how much you have in a
Mhm.
401k. That 401k cannot be attached to a custodian, which would be like a job that controls it. It has to be separate. And so that's where some people get frustrated, because maybe they haven't left the job yet, so they can't roll it over yet until
Mhm.
they leave that job. So sometimes that might be something that we use later. But that can also, if it's available, it can go hand in hand with an SBA, because the SBA doesn't, well, the 401k rollover, the ROBS, is not considered debt. So it can be used for your liquid equity injection, or your down payment, or your reserves requirements for the loan, and basically as a bridge for the SBA, so they can work together. What else is there? There's also going to be startup funding using just your personal credit and leveraging the strength of your personal credit. So that's probably going to be financing a little bit smaller franchise in the range of 50 up to 200,000, in that
Mhm.
range. And that would be leveraging term loans and 0% credit cards as a way to start, kickstart, or bootstrap your startup using your own credit. So basically, instead of having an equity investor come take equity in your business, you're using your own credit as your equity injection. And then the idea would be then to build business credit, and then
Mhm.
in due time, wean yourself off that personal credit and transfer the debt to the business. And we help our clients do that. Finally, the last thing, which I think is very important, I just had a conversation with someone yesterday about it. They're like, they need 300,000 for the franchise that they're looking at, and they have 500,000 in savings, cash,
Mhm.
right? And they wanted to look at debt options, but they really don't want to take out debt when they have this cash.
Yeah.
So another way to do that, there's a strategy called infinite banking, which
Mm.
is basically it's a specific type of insurance policy where you can store your money. and it's protected by the insurance. And then it gains about 5 to 6% compound interest growth. And
Hmm.
you're able to borrow against that at around 5% and then put that into your
Is this sort
investment.
of like long-term life insurance? I've never even heard
It
of.
is, right.
Yes.
It's a dividend paying mutual life
Yeah.
insurance company. It has very specific dividend paying mutual life insurance company with a
Mhm.
whole life insurance policy. And
Mhm.
basically, just for example, on $100,000, we could put 10,000 towards the cost of insurance, the death benefit, and
Mhm.
90,000 goes into the savings bucket or the PUA or the cash value. That portion is now growing and it's uninterrupted. That's why it's so powerful because now it's growing at around 5.75 to 6%
Does,
uninterrupted.
and does the interest rates impact that at all? Is like when interest rates are higher, does it yield higher, or does it,
Yeah.
like how does that impact?
Yeah. So the what's really cool is that the insurance product itself with a dividend paying mutual company is inside of its own bubble based
Mhm.
on the performance of that insurance
That
company.
fund. Okay.
So if
Mhm.
that insurance company is doing very well, if they're doing strong, then the rates, the dividend rates that they pay because
Mhm.
they're mutually owned, so they pay dividends, are
Mhm.
going to increase, right? Now, there's a legal cap on a policy loan, which no matter what happens in the market, interest rates go up to 25%. Highest rate on a policy loan is 8%
Yeah.
forever. The average policy loan is at around 5.5%. So you're growing the money uninterrupted, meaning when you borrow against it, it continues to grow. So it
Mhm.
doesn't stop growing. And then you're borrowing against it. There's an interest rate on that borrowing portion, but
Mhm.
it's uninterrupted while you're borrowing. And then you're deploying that to invest in your business. Now, because that money is protected by the death benefit, they don't dictate or regulate when or how much you have to pay back. So what
Mhm.
this gives you now is flexibility and control because you don't have a due date.
Mhm.
You can take your time to pay that back over time. You can not pay
Wow.
it for a certain amount and then pay it back in a lump sum. At the end of your life, if there's a balance on the policy loan, and you never paid it back. So now let's assume 30, 40, 50 years later, that policy loan has matured and I'm sorry, that policy cash value has matured and seasoned to $2 million, and you have a $2.5 million death benefit. You borrowed 100,000 that you still have outstanding. When you pass away, then the death benefit, before it gets dispersed, they'll just resolve that balance
Sure.
on the death benefit.
Yeah. Yeah.
So what that also does now, Brandon, is it creates a buffer, a volatility buffer, a hedge against your investment, whether it's
Mhm.
directly in your business. Because if things don't go as planned, if that money came right out of my savings, there's no way I can recapture that. There's no way
Yeah.
I can get that back. But by protecting it here, leveraging it into the business, if things don't go as expected, as I hope, right? Number one, in my lifetime, I can pay myself back and then with the compounding interest, earn back that loss potentially in my lifetime, right? So there's an opportunity to recapture that loss. But
Interesting.
worst case scenario, my death benefit resolves it, which again plays to my fundamental mission, which is legacy.
Yeah.
And ultimately that's what our purpose should
No, and
be,
that's
which
super interesting. Like most
you
people
know,
probably never have heard of. I mean, I have heard of long-term life insurance,
yeah.
full life insurance, all those sorts of things, of course, and but never heard about velocity banking. That's really interesting and shows why people could and should talk to someone like Sebastian before they take the leap into entrepreneurship. But then obviously, if they want to learn more about that product, they can check out your website. We'll have the links, all that kind of stuff. But
Yeah.
without bogging down I want to get back to you and your journey a
Yeah.
little
Thank you.
bit. And because obviously you're an expert and that's how you and I are. We can talk about those kind of things all day long. But I think people
Yeah.
are,
I geek out on that stuff. So
yeah, yeah. But let's hear more because you've launched this business and you took the leap of faith and you've gone through the pitfalls and the challenges and the struggles. And everyone sees the successes and they see the Instagrams and the YouTube videos and everything's great, right? But they don't always see the struggles that are
no.
kind of behind it. So,
Yeah, you don't see I'm up at 1 o'clock in the morning working on a case, making sure everything's packaged properly so that this client gets their loan
mm,
or designing a policy. And at the end of the day, like the way I operate in most cases, unless you're hiring me from coaching, I get paid based on results. So if the loans don't close, there's no income. And so
yeah. And you're having
it's just the
conversations, like
income.
you said, with people who really have no idea what they want to do, or if they're ever, if they just think that someday they want to do something. So
Right,
you might
right.
like, I don't know, is that your biggest challenge, or what is the biggest challenge you faced, and what have you done to
Yeah, I'd say unfortunately there's, I guess, two types of people. There's the person that's coachable
Mm-hmm.
and willing to follow the lead of an expert who's trying to help them. And
Mm-hmm.
then there's the person that knows enough to hurt themselves. They know enough to sound good or to have enough information, but sometimes even a little too much information, even though it's good, it could actually hurt you if you don't have all of the information. And those just the one who's really not coachable because they have so much information that they think they know it all and it can't help them because they know it all. And unfortunately, that's frustrating because I can almost predict what's going to happen based on the circumstances. And then usually that person will call me back in a month or two or three or four and say,
Mm-hmm.
"Hey, can you help me? I did this." And I'm looking back and I'm like, wow, no, now I can't. I can still help you. It's going to take time now, regroup and rebuild. But had you moved forward 3 months ago, 6 months ago, yes, I could have
Mm-hmm.
helped you. But now, based on what you've done since then, no, there's a lot of damage, right? So unfortunately, that's just I think in any industry, whether somebody's coachable or not coachable, is the two groups of people. And obviously, someone who's coachable, I love working with coachable people, right?
Mm-hmm.
Even if they're not golden, meaning they're not like perfect credit, perfect everything, because I can coach them, right? And they'll get there if they are willing to take the necessary steps and actions, whether it takes a couple months or whatever the case is. But someone who is 100% and they're not coachable, they may still get what they need, but maybe not even what they want because maybe they could have gotten something better had they just followed some instructions and tips and maybe worked with a different bank or a different lender. Because no, even like for example in the SBA space, no two banks are the same. Generally speaking, you have the interest rate is prime plus between 2.75 to 3%, but some banks can reduce that a little bit to 2 or 2.5%. And then some banks are going to require larger down payments. Some banks are going to be a little bit more flexible with that, especially if it's a franchise. The challenge is that the government's the SBA, the bank's the lender, and the government creates all these rules the banks have to follow. One
Mm-hmm.
of those rules is that the bank can implement their own rules on top of the government rules. So if you talk to 10 banks, you'll get 10 different stories.
Sure.
Literally. It
Yeah.
could be an industry issue, it could be assets issue. So
Mm-hmm.
unfortunately, when you're coachable, I can probably guide you to the not just get approved, but to the best option.
Yeah, no, and
Versus,
learning all these different options and even just how to communicate with individuals, because getting people to talk about their money, like that's personal, like that. And this isn't something that you, I don't know, necessarily knew how to do. You had to learn it, right? Was there some, did you have a coach? Did you have, was it your brother? Did you have a mentor or a
no,
guide
just the
tell you this
grace of
stuff?
God, just time and trial and error. When we first started, I remember like the conversation, we wanted to seem like we had authority. So we like projected as if we were the lender, but that actually backfired because
Yeah.
people don't trust you. And
Yes.
when you're talking to a loan officer, usually you're on guard. You're like trying
Hmm.
to hide things. And so that's why, if you know what I said, is we are consulting, coaching, and then brokering. Consulting first, because if you know that I'm a consultant, I'm
Hmm.
not here to tell you yes or no. I'm here to review and assess and then help you to overcome and
Hmm.
achieve your goals. Then I need you to be as open and honest and transparent with me as possible. Because if you're not helping me to help you,
Sure.
because it's gonna come up later,
Yeah,
whatever
and
it
now
is
you do a
that
lot
you're
in the
hiding.
franchise space currently. Was that always part of your plan, or did you know
No,
about franchising when you got into finance?
not at first. No, it was just wide open. We're just trying to find our place, and we just there's a marketing strategy that says find your niche, and the more narrow it in on your niche you are, is the better you'll more productive you'll be. And we didn't do that. No,
Mhm.
not at first. We were okay. We have to reach everybody, and
You
we
weren't
did all
coachable.
right. Huh?
You weren't coachable at the beginning. I'm just kidding.
Not no, yeah. We were just we're trying to find our legs, right?
Mhm.
And
Mhm.
but one thing we did do is we were really good at creating relationships with referral partners, other finance companies that maybe couldn't help their clients, and then they would refer clients to us
Mhm.
for some of the solutions we had that they couldn't help them with. That's where we started. But unfortunately, with that, is you end up getting a lot of people that are just not qualified, and unfortunately in the finance space, when people aren't qualified, a lot of them just give up. They really are not ready. They don't really want to take that action to improve or get ready for the next level. Either they try to do it on their own. So that coaching part is actually a little bit difficult because a lot of times people are just like, all right, I guess I don't qualify, and they give up. And so I always say, look, the only person I can't help is the person who does nothing. If you literally just sit on your hands or you're sitting there like this waiting for a pot of gold to fall from the sky,
Yeah.
I can't help you. But if you're willing to take action, I can help you.
So what are some of those actions that you commonly recommend? Let's say I'm someone a college student who
Yeah.
just came out of maybe graduated 5, 6 years ago and has been working a job and just has that feeling of emptiness, lack of fulfillment, or whatever, wants to be their own boss, but they have student debts and maybe they're newly married,
Yeah.
kind of similar to you. Their wife is 2 months pregnant. What kind of advice would you give young Sebastian Boyer who's going out to try to start a business now?
Yeah, first I always tell people if you have a job, if you are employed, don't quit. First of all, keep your job and keep that steady income coming while you're finding yourself to find your purpose. And so let's be safe in that regard. Number
Yes.
one. Number two, usually if it's someone who's younger like that, the problem is on their credit is that they don't have any depth in their credit. Maybe they have a student loan and a car loan. Maybe they don't have, maybe even they just got a mortgage, but they don't have enough credit card depth on their history or other loan depth. So
Mhm.
they may have a decent score, maybe around like 680, 690, but they're not getting further on the credit score because they just don't have enough depth.
Mhm.
I would advise that person, okay, we need to create some depth by establishing some accounts and creating some transaction records. And that's how you build credit. Unfortunately, there's no other way to build credit except to create transaction records.
Mhm.
Personal credit or business credit, we have to build credit by creating relationships with banks and lenders and having records of transactions that those records report, and it builds your credit over time. It doesn't happen over a month or two. It's going to take about 6 to 12 months. So one example, I have a client who came to me. They were a mess. Not only did they have like several late payments and open collections, but they didn't have a lot of depth either. So on top
Mhm.
of that, so I advised them, okay, here's a few accounts that you can build your credit with to create new credit, but you need to fix the damage you have. So first of all, stop, no more late payments. Like we gotta stop the bleeding. But repair is a whole different story. So I don't do repair. That's a full-time job by
Mhm.
itself. That's disputing with the credit bureaus, Experian, Equifax, and TransUnion on damage, late collections, charge-offs, these things. If the statute of limitations is 7 years, if it's a bankruptcy, it's 10 years for a
Mhm.
BK. If you just sit there, wait, you're going to be in the same boat in 3 years, 5 years. So I advise people, here's a referral to an expert that I trust. You can vet them, maybe vet another one or two others, make a decision, hire somebody and start disputing, start fighting and trying to clean up your credit. Because if you don't do it, you're going to be in the same boat in a
Mhm.
year, in 2 or 3 years. Now, the thing about credit repair, Brandon, is that it is not guaranteed. Legally, a credit repair expert is not even allowed to use those words. They're not allowed to say that. It's an uphill battle. It's basically a bulletin board, your credit profile that's easy to put stuff on, but it's
Hard
off.
to take it off.
It's very difficult. So let's say you had 10 items negative on your credit, you might go 3 months and 4 months and get 6 or 7 of them off and still have two or three lingering. So you'll see a nice improvement. Your scores will go up, but maybe that's not enough yet. You still need to continue, right? So that's where it gets a little bit hard for folks because it takes time. It doesn't happen overnight. It's
Mhm.
frustrating, but you have to take action if you want to change your life, if you want
Mhm.
to move
Sure.
forward. Otherwise, you're just going to wait for the statute of limitations to expire before you can move
Yeah.
forward and do anything.
Yeah, so get in there, start planning and taking action, regardless whether it's good credit, bad credit, or no credit if you're younger. And now let's shift the scenario a little bit. Let's talk about okay, current day Sebastian Boyer. He's ready, he's experienced, he's been a business owner, he's run his own company here now for 12 plus years, 15 years. Now you're looking to make an investment. What kind of financing strategy would that, if you were going to buy a franchise today, what what financing strategy would you use today?
Yeah. So here's the thing. So if you're an existing business and you're going to expand into the same industry, right?
Mhm.
I would recommend they look at maybe a franchise acquisition
Hmm.
if that's available to them, because then that can be considered an expansion of their existing, and then they just put everything under the same brand with the franchise. And then that could literally be, they could look at the business tax returns and the performance of your business to expand. Otherwise, you're still going to be considered a startup, right? And so whether you have excellent credit, you have 20 years in business, or you're starting out with very little credit, the requirements are going to be the same. The good thing about starting a franchise is because of the training and the support and the brand name recognition, the banks feel more comfortable. So they're going to reduce, typically, they're reducing the down payment requirements,
Mm.
which they call equity injection, instead of 30%, which was what it would be for like an
A
independent
pure
startup,
startup. Yep.
pure startup. Yeah.
Mhm.
It'll be around 10%.
On
Typically,
an
what would
acquisition, what is there a rule of thumb for equity for like cash down, or does it have to do with cash flow
same
of
thing. It's
business?
about 10%.
10%.
Yep. So acquisition, independent acquisition, or franchise acquisition, or startup franchise, it's
Hmm.
typically going to be about 10%. But that's not all. And so we are talking SBA now. That's what we're
Sure.
talking about. And they also want to see 6 to 12 months post-closing liquidity, which is reserves that you have for 6 to 12 months. And
Mm.
they want to know that that's not completely tapping you out.
Yes.
That's not all you have.
It
So,
can't be like 100% of your salary or
right.
100% of your savings. It has to be, you have to be able to cover your living expenses, right?
Correct. Correct.
Yeah.
So and a lot of people then say, how about if I have equity in my home? Can I borrow from my equity? Or
Mm-hmm.
my parents or my siblings, they want to lend me the money. Can I do that? And unfortunately, that's debt.
Mm-hmm.
So what happens is what the bank is going to be, they'll be okay with it if you can show that you can service the debt with your personal income and you're not going to require income from the business to service that debt, whether it's a
Mm-hmm.
loan from mom and dad, a loan from your other business that you have,
Yeah.
or you're going to take out a home equity line of credit and to help bridge the gap.
Yeah.
That's okay if you have income that can service that and that you can show that, and that's not going to require income from the business to service that debt. Otherwise, it's going to add strain and stress to the business, and then that's going to be a no-go. So family and friends, if that's the case, then they'd have to agree to sign a document that it's not a loan, but it's a
Mm-hmm.
gift.
It's a gift. Right? Yeah.
A gift.
Hmm.
Right.
No, interesting. And I'm sure that in your line of business, you're constantly looking at new products that are coming out, and I guess even trying to forecast and come up with different ideas for individuals to be creative and whatnot. Crowdfunding seems to be a thing these days, VC and whatnot, venture capitalists and whatnot. So, kind of looking ahead, do you see any emerging trends or forecasts on how funding might be changing in the future?
Yeah, just in the last 10 years, the fintech financing has taken over since COVID, even it catapulted, right? Because there was the big problem at that time was the government was trying to release money through SBA was trying to release money on the PPC loan, the Paycheck Protection
Hmm.
Program, and then also the EIDL loan. But the EIDL was from the government, but the PPP loan was through the banks. And the demand was so high that the banks could not keep up with it based on their old way of doing things, pen and paper. And so the fintech stepped up and is what really allowed that program to be successful. So the first round of that program was chaos. It was a nightmare. The
Hmm.
second round was much more fluid because you had fintech step up into that arena. And then since then, the SBA has now awarded a lot of these fintechs the SBA privilege. But it's not just SBA, it's term loans, it's lines of credit that not nothing to do with SBA. So the emergence of the fintech industry in the finance space, um, yeah, financial technology has definitely changed the atmosphere, the environment. There's a lot more options available now, but it's also created a lot of smoke and mirrors in many cases, and a lot
Hmm.
of gimmicky products that are really masquerading as a line of credit or as a loan when it's really a merchant cash advance or a business cash advance,
Hmm.
which is basically a payday loan for a business. And
Hmm.
that is something that I try to teach on my channel and I try to inform my clients about to be very cautious, be very wary of that. There's a time and place for for that product,
Hmm.
but most of the time it's not the best option or the best solution. If
Hmm.
you have good credit, you can most likely get a much better product. But again, they are masquerading and it's a very fast sale. They make a lot of commission. You get funded within 24 hours. So
Hmm.
that's the motivation. People get excited. Oh, I can get that money right away.
Hmm.
There's no interest rate on it. It's a factor rate. And
Hmm.
if you don't know this language, they tell you the factor rate's 1.45, there's no interest rate. You don't know what that means.
Yeah.
What that means is if you were to calculate an interest rate out of that 1.45 factor rate, you're paying 45% interest.
Wow.
Yeah.
Yeah.
Now, how do they get away with that? It's the language that they use that puts it in a different jurisdiction
Mm,
where they found a loophole where they're not providing a loan. It's not
mm,
a loan, it's an
mm.
advance.
It's in advance. Yeah.
And it's not an interest rate, it's a factor rate,
Mm,
which is a risk assessment based on your last 3 to 6 months bank deposits or merchant processing statements that shows your cash flow and how much money's coming in and how much is going out. So
mm,
they project, okay, for the next 8 to 12 months, if you continue on that same trend, you can qualify for typically around 80 to 90% of that. And then they look at the cash flow, and then they do still look at your credit, and that might be the difference between you getting a 1.25 factor rate, 25%, right,
mm,
versus a 1.45 factor rate. But typically the payments are daily or weekly. It comes out automatically. And again, they sell it as a good thing. Oh, it's
mm.
going to come out automatically. It's on your transactions, or you won't
Yeah.
even feel it or notice it. You'll have the money in
But
the
you're
bank
giving
account.
away half your business at
You're giving
45%,
away.
your cash flow's just zapped. Yeah.
And a lot of them have no prepayment advantage. So
Yeah.
whether I take it out to,
I guess the moral of that is just if something seems too good to be true, it probably is.
unfortunately. And so there's a lot of
Uh-huh.
that's with the good.
Yes.
There's always the bad
Yes.
that comes up. And so there's unfortunately a lot of that. So I've
Mm,
actually been helping a lot of people restructure that. I helped a
mm,
client. She was doing a home healthcare company in New
mhm.
York. She had almost $3 million in
Wow.
merchant cash advance debt or business cash advance debt. And I was able to restructure that in an SBA 7A for
Mm,
her, which allowed her to expand
wow.
astronomically. She was given granted contracts from the state, opened
Mm,
up like 20 new locations
amazing.
since then. So
Mhm.
that's a
Great,
story.
great. Now you've helped lots of people, obviously, over the last 15 years. It's been a good ride. What would you, if you're going to summarize your most, because I'm assuming it seems at least like you're passionate about, you said you even said yourself, I can geek out about this stuff. You've more of that emptiness feeling that you felt in the
Oh,
tech
no,
space
no.
before. So what is like the most rewarding part of your work right now?
Yeah, the most rewarding part is when I hear back from somebody after, whether it be 3 months, 6 months, or a year, or whatever the span of time is, and they tell me how the business is flourishing and they're thankful. They literally say, we couldn't have done it without you. Or when I hear things like that, it's not about me and my ego, but it's just the fulfillment of knowing that that person is doing well. And I played a part in getting them to where they are, like getting them the funding they needed to start that business. And usually at that point, they're calling me back to see if they can expand or get more funding to take it to the next level. So those are the most rewarding ones. Either clients that are calling me back because they're doing great, so they want to level up to, and they're looking for more help, or maybe they refer someone to me. And again, the same thing. It's because I was able to help them and they're doing well. And so now they feel confident they can refer a friend or family member to me. So those are moments that are rewarding and make you just feel really good about what you're doing, and that makes you feel happy that you're doing the right thing. Because at the end of the day, I'm helping people start their businesses at some level. I'm not, they're expanding and growing. They're contributing to our economy, our society. They're creating jobs for other people. There's the reach of what we're doing when we're helping entrepreneurs is you can't see it. Like it's so vast and great. And small businesses are the life and blood of our country and of society. Without
Mhm.
us, small businesses, everything would fall apart.
Absolutely, absolutely. All right. Thank you so much for being here. Just we're getting towards the end. I like to finish with some like rapid fire type
Oh
questions.
boy. All right.
Okay, so I'm gonna ask you a couple questions, like one sentence or less. It doesn't have to be one word. Quick, no overthinking. Okay.
Okay.
So
Let's see.
what's
Let's see.
one thing every franchise buyer should do before they apply for financing?
Check your credit and review it, and either have someone help you to understand it, or just but verify your credit yourself before applying to any
Okay.
bank or lender.
What's one thing they should never do?
Apply to lenders without checking your credit first.
What's your
Yeah.
favorite franchise industry right now?
Favorite franchise industry? I'm having fun with a lot of mobile pet companies. It's a hot trend, and the range of funding is between 50 to 150. So I have options and solutions that can help most people,
Well,
but
if
that's
perfect. If you had to pick one, would you pick the SBA or the Robs? You have to pick one.
okay. If I qualified for both, I
Yes.
would go with Rob's because it's not
Go.
debt. It's not debt. So why
Right.
would I take that if I didn't have to? Yeah.
All right. Without disclosing any personal information, what's the biggest or even most comical mistake you've ever seen on a funding application?
The biggest and most comical, oh man,
Biggest or most comical, yeah.
wow, the mistake. I guess just like maybe the misspelling of a name or an address,
Their own
something
personal
that,
name. Yeah.
yeah, they forgot that they got married and put their old name.
They say not married in the check that
Yeah,
box. That'd be a big
yeah,
mistake.
yeah, something like that. It's usually just absent-mindedness and just
Sure.
not taking the time and
Sure.
miss
Are you reading
things.
any good books lately? Any book recommendations you'd make?
I tend to read a lot of spiritual books. I guess my favorite book right now is it's by Dr. Andrew Whitman. It's what is it? It's Covenant for Rookies.
Okay. Cool.
That's the book I love.
Yeah,
Yeah.
I'm spiritual. I'm reading Confessions by St. Augustine right now. So yeah,
Oh wow, St.
I always,
Augustine's awesome.
yeah,
Yeah,
it's my second time through it. Last time I read it too quickly. I'm trying to go a little bit slower this time. So
that's awesome. Yeah, I read that in college. I should go back and check that or reread that.
yes,
Yeah.
it's a good reread. So if you could have dinner with any entrepreneur, dead or alive, who would it be?
John Maxwell.
John Maxwell, good choice. He's a great author too. Lots of good books.
Yes.
Yes, it was
Yeah,
a
that's a great book. That
seven steps to leadership or something like that. I can't
yeah,
remember. That's one of the best books I ever read in my life.
I recommend that book.
Yeah,
Yes,
yeah.
to
Oh,
everybody. Yeah.
seven laws of leadership. Is that what it is?
It's the is it 7 or 12? It's 10. The 10
10.
irrefutable laws of
And you're
leadership.
yeah, yes, we got to put
Yeah.
that link in the chat. Yes, that's a great book. Absolutely.
Amazing. Amazing.
Great. And what's one word that describes your approach to business? One word.
One word,
Yeah.
direct.
Direct. Wonderful. Cool. All right. Any final thoughts or anything you want to share here with the team? Obviously, where can people go to learn
Oh,
more
sure.
about
So
Orange
you
Cane?
can check me out and subscribe to my YouTube channel at The Approved Guy. That's the channel. My website is theapprovedguy.com. From there, you can schedule a free consultation. You can see all the different services that I offer. And I'm happy to offer, I do 15-minute consults. And so even if it's just to say hi and talk to me, and I'm happy to spend 15 minutes, get to know you and see if there's some way I can help you on your financial journey.
Awesome. I appreciate your support over the years, being a friend and a lending partner for some clients that I've worked with, and then now also for BI affiliates and BI brokers. I know they're sending you referrals as well now too. So keep it up,
Yes.
and thank you so much for being just a good person who people can lean on in difficult decisions. So thank you for your time, Sebastian. I really appreciate you being here, and that's the note for today. Thank you, guys.
Thank you, Brandon.
Thank you so much for tuning into this episode of Business Alliance Insights. I hope you're walking away with some valuable insights to help grow and strengthen your business. If you're looking to connect with other business leaders, franchisors, franchisees, brokers, or even just looking to explore more tools to scale your business, be sure to get connected to our BAI network and check out FranLink, our exclusive social media platform built solely for our members. You can learn more about it and everything Business Alliance Inc. has to offer by visiting businessallianceinc.com. Again, that's businessallianceinc.com. Don't forget to subscribe, leave a review, and share this podcast with other business leaders who are ready to take their businesses, their brands to the next level.